Hello, Verity traders. This is our weekend market analysis. Let's get into it. Both the S&P and the Nasdaq were down. They erased previous week gains, which they weren't great anyway in terms of volume. The S&P was down 0.30% on Friday, and the Nasdaq a little bit more than 1%. But let's see what happened. We had big companies reporting earnings. We're going to have even more next week. But the ones that reported earnings had a big impact on the market and a lot of volatility. Company like Microsoft, Meta, Tesla reported earnings. And even if they crashed earnings, this didn't reflect exactly in all of the charts. In fact, some stocks like Microsoft moved down even after having good earnings. But we need to remember that big part of earnings, especially for the tech space, is CapEx and forward guidance. So we need to keep that in mind. Very volatile. We had a partial government shutdown. So on Friday, apparently in the US, a bipartisan deal was struck, but needed to be approved also by the House of Representatives, which is going to be available on Monday. So we'll see what happens on Monday. I don't think it's going to be a big deal because nobody wants a prolonged shutdown. It's not good for anybody, but we'll see how it develops. The tech and AI space is still lagging, has been lagging for weeks, but now it's very, very reactionary, especially with its earnings coming out and geopolitical and economic events. Warsh was nominated as FOMC chief. This guy is apparently known to be hawkish, so this worried a little bit the markets, which was already worried about policy changes and the Fed itself. But the fact that this guy is considered a hawkish person reduced the rate cuts expectations, and as a consequence, the dollar and the yields went up. Gold was down and silver was down historically, they were down a lot. It went down hard. A few weeks ago, I warned whoever is following me that when everybody is so obsessed and focused on one asset, that's a warning sign. I'm not saying that the gold and silver will not go back up, won't recover. What I'm saying is you need to be careful with fear of missing out and not jump on a trade just because everybody's talking about it. It's very dangerous. So we have a ton of earnings this coming week. So we're going to have big reactions. We have companies like Palantir, Disney, Google, Amazon, Eli Lilly reporting earnings. Those are going to be big market movers. So we need to consider that if we want to place trades, we need to be ready to see a lot of volatility. We have also a lot of unemployment numbers coming out in our economic calendar, but I don't think it's going to be as big market mover as the earnings. So what do we do in these situations? We look at relative strength and weaknesses. So we know which stocks, which sectors actually are performing well, even during these volatile times. We know where pockets of strength are. So if we really, really want to place a trade, we should look into that. We know that the tech sector is very volatile. I wouldn't myself be in it at the moment, but I know that there's other sectors and other stocks that are more stable, they continue to perform well, and I know where to go to find them. Again, this is not financial advice, and this is just what I personally do. In these times where it's a lot of fear, risk, I'm less exposed to the market. Less exposure means less risk, and that's what I personally going to do. This is not an advice, but we don't have to trade all the time. Sometimes it's better to keep our gunpowder dry. Sometimes it's just better to be on the sideline, observed, and remember, cash is a position. That was it for this weekend market recap, and I'll see you next time.